This is Rod Kusin, Spooman for Risk on December 15th, 2009. All times on the charts are Central Standard Time. Our video today is going to look at a couple of points regarding our group reversal system, how we handle things when we don't have group reversals, what we make use of to pull our trades, and some interesting observations relative to support and resistance using the TradeStation Trade Manager volume chart. Now, you have a view of our primary trading screen at this time. We have 10 charts on this workspace, and this is where we plot our group reversals on the various arrays of 9 different groups. We just had the closing bell. The 9 different groups on our workspace. Now, what we're going to focus our attention on, first of all, is the high of the day. Now, you can easily see where the high was right after 9:51 Central Standard Time. But as you look at this time, you'll also notice that for the most part, right at the high, there do not appear to be any group reversals right here. Now, we do get some reversals about 3 ticks away from the high, but our goal, wherever possible, is to get those reversals in within 2 ticks. In this case, they came in 3 ticks. And you can see that. Here's chart 1, 2, 3, 4, 5, 6, 7. Chart 7, you'll notice that the group reversals show up right in here, and right in here, and right in here. Now, that having been said, the point of the matter is, oftentimes when we're just a little bit late, or when it looks like we won't be able to pull a group reversal, we will use an alternate method. So we're going to bring up the alternate chart here. And on our alternate chart, which is referred to as our market internals chart, we use a variety of different conditions that go into the trades that are being pulled off of this chart. So I'm going to take a minute and just describe them to you. You can see evidence of this when you actually open up the strategy itself. Just verify which strategy. Yeah, this is the correct strategy. And what we use in this chart, we use, first of all, an array of 3 different market internals on groups 1, 2, and 3. And in that case, what we're doing, we're plotting group reversals off of the first group of ES charts, which must agree with the second group of tick charts, which must also agree with the next group of ADSPD charts. And in this particular case, what we're asking for is at least 3 out of the 6 charts in total have the MACD in agreement in terms of its trend on those 3 market internals. But it doesn't stop there. We then want at least 2 of the 6 charts that we're plotting using bank. Okay, we've got 6 different bank tick intervals that we want to have agree with us. 2 out of the 6 have to agree as far as the MACD. And then the last thing that we're using in the strategy is the VIX. Okay, we only need 1 out of the 6 charts to agree on the VIX, and in this particular case, all that we want is the VIX 1 tick chart to agree. So the MACD has to be in agreement on all of these in order for us to pull a trade. Now, we had a little trade prior to that, we wouldn't take that necessarily because we're still waiting for a group reversal as we're moving up. But as we see we're not getting them, then this chart becomes more compelling. And here we have our first set of short trades as the market is moving down. This is much closer to what we're trying to achieve in terms of the accuracy of the group reversal system. So instead of demanding group reversals off of ES alone, we're looking at group reversals that are basically taking place among several other market internals. And once again, that includes not only the ES, but it includes the tick, the ADSPD, bank, and the VIX. Pretty interesting. Now we're looking at our gap chart that shows that where we shorted the market up here, we have gaps at 1104.50, 1102, 1101, and even a little less than that. And ultimately today, all of those gaps got filled. Now we were particularly looking at the first gap at 1104.50 to be filled. That was early on. Okay, that got filled at around 1222. But then as the market pretty much stagnated for a rather extensive period, we were looking at other gap fills below the market. Landed up here finally. Here we have the 1102 gap filled, and then late in the day both the 1101.25 gap gets filled, and I think that's the 1100.25 gap gets filled as well. So those could have been a variety of different targets that you could have been watching for. Now we'll quickly take a look at the day as a whole. In terms of pattern, when the high of the day occurs in the morning and the morning low has not been exceeded before noon, but we've dropped off significantly nonetheless, the probability that we will hit new lows is really, for the day, is really pretty good sometime in the afternoon. So we were looking to hold that trade not only until we reach the low at 1103.25, but that we also ultimately receive gap fills as we've just discussed. So there was another indication that pattern was going to be in your favor. Now we had a very stagnant period between about 12:45 to around 2 o'clock. I mean, that was just grueling. But let's take a look at how the strategy pointed out opportunities to short that market. Now, using the same approach that we previously described, you'll notice that the strategy took several short trades in here that all occurred when those conditions that we previously described prevailed upon the market. So we had shorts here and here and here, and we took various short trades along the line of those at those particular prices. So that was another reason. But now let's get into our final aspect of our demo today, or pardon me, our video. Now first of all, notice that the market was just basically moving at one point for almost an hour and a half between 1106 and 1105. If you look on the matrix, resistance or support levels seem to harbor right around high volume areas, here at 1105.50 and here at 1104.75. Watch that. It works very, very well. Use these high volume areas as support or resistance levels. You're going to need to break through those levels if you're going to expect market activity to go beyond it. And that's our video for today. This is Rod Goosen and Spooman for Risk.